Hello and welcome to Good Returns. We are very privileged to welcome Nishit Shah of Aquitas Investments today. Nishit, a very warm welcome to you.
Thank you so much, Shruti. Nice for having me.
Thank you for joining us today. We have our interim budget tomorrow. It's a very important day, and everybody is talking about what is expected, what is not. Now, we understand that this is a vote for account budget where Nirmala Sitharaman, our finance minister, herself has said that don't expect a drastic big announcement. But still, if I had to ask you that what is your overall expectation from the budget, something that you're expecting, something probably or not, what would you say?
So again, as you said, it's an interim budget. So what it typically means is that government outlines their anticipated revenue and expenditure till the main budget comes in. So this would be vote in account budget, and nothing major is expected from this budget from us as well. Again, if you see the market scenario currently, what we feel the budget would is majorly accounted for in the stock prices, and even the elections are more or less now discounted in the stock prices. So both of the things what we feel is would be a major non-event going forward.
Where do you expect the stock market to be after the election this year? I mean, what is your outlook of the Indian stock market?
So one thing I'll tell you, Shruti, is that we are very bullish on India, but we are not very bullish on the Indian stock markets. What happens
Okay.
is when there is a certainty, the stock prices tries to discount that certainty. So currently we have, so it's very certain that the current incumbent government is going to come and win the elections and going to come again. So the
Okay.
markets have what we feel majorly discounted that, and that again we see in the Nifty. In fact, as we go down, which happens typically in a bull market, the small cap index has rallied higher than Nifty, and this SM index has rallied even higher than the small cap index. So what we
Yes.
feel is it is majorly discounted in the stock prices going forward. So again, the markets we don't feel will do much, but again the economy will continue to do well.
Right. I mean, only yesterday, IMF has revised India's GDP growth outlook to 6.5, which is a good thing. However, let's go back to the budget discussion. Given the economic outlook that would be presented in the interim budget, what strategic shifts or probably reallocations are you considering within your portfolio?
So currently we have aligned our so what we do at Equitas is we take a very long term view. Our
Right.
portfolio over the last 5 years is aligned to the domestic infra story, uh, be it pipe company, EPC company, capital goods company, railway theme, cables theme, etc. So currently, and this, as we have seen over the last few years, the government focus has been on reviving the domestic capex cycle. So government has focused on spending on domestic infra, be it roads, be it railways, airports, etc. So again, we don't feel that. So we feel that the government will continue with this growth-oriented budget, and our portfolios were and are aligned in that way. But looking at the current market scenario and how the stock prices have factored in, let's say for the next 2 3 years, where the PEs of price to earning of all the stocks have typically gone to 30 to 50 kind of PE levels, that means that it has factored in for the next 2 3 years. So what we are doing currently, we are trimming our positions and holding on to cash for into our portfolios right now.
Okay, okay, understood. So you spoke about government, prioritizing a few sectors post budget or during the interim budget. Which sectors do you think needs most attention at this point in time?
So there are few sectors. So overall, the government in the last 10 years have done phenomenally well. They have recognized the industries and sectors where supports were needed, and they have provided specific boost to those industries and sectors. They have focused on domestic manufacturing via, let's say, indigenization, PLI. giving specific incentives to those sectors. Currently, there are few sectors, let's say chemical sectors or steel industry, which are facing few dumping from international markets. I think some protectionist measures are required over there. Apart from there, what the government have done in the last few years, those are very good steps, and I feel the government should continue doing what they have done. Basically, focused
Nice.
on the growth budget, growth mindset, and focusing on increasing the capex.
Nice, interesting answer. So, Nishit, you spoke about growth mindset. Our Prime Minister Narendra Modi has already said that India is going to become third largest economy in the world, probably a $5 trillion economy very soon. What are your thoughts on that? And how soon or how fast can we achieve that? You think?
So the timeline would differ, but the direction for sure we are heading far higher than the $5 trillion economy. We are
Right.
basically one fifth of the world population. So I have no doubt, and the kind of political stability, government stability, fiscal stability we have seen in the last few years, we will definitely achieve that. Timeline, I'm not sure.
Sure, no problem. So let's now you spoke about stock market, impact of elections probably on the stock market. These are very domestic centric. Let's talk about the global economy, the risks, the geopolitical risks, probably Ukraine, Russia war, Israel, Palestine war. Let's talk about rising inflation and stubbornly red hot inflation in most developed countries, while the U.S. Federal Reserve has been trying to tame inflation by raising interest rates. And for some time, these central bankers kept saying that inflation is going to be it's a transitory thing and it's going to cool off. It hasn't. US inflation target, Fed's target is at 2%. It's not near 2%. However, I think India is in a much safer place now. So, what kind of downside risks are we looking at for the Indian stock market, say in the next year?
Okay. So one thing about the global interest rate cycles, we have to understand that we had a decade low of low interest rates. So
True.
expecting that we just increase the interest rates and then see the inflation coming down, I think it would come down, but it will come down eventually, but it will take some time. Coming to the Indian markets, our central bank has done phenomenal job in managing the interest rates. But of late, what we are seeing is that in terms of liquidity deficit, since our loan growth has been significantly higher than the deposit growth, the economy is doing very well. So we have seen liquidity deficit in the last few months. Currently, we are standing around 2.5 lakh crores in terms of deficit, and that is why RBI is now regularly doing VRR. And
Right.
few of the banks chiefs have indicated that going forward, the interest rates for India would go on the higher side. One, the demand for growth is higher. Second, the deposit growth, CASA, has been on the lower side. CASA is usually there, low cost deposits for the low cost deposits for the banks. The
Right.
other thing which is interesting is that we see money flowing from, let's say, uh, deposits to stock markets. So over the last few years, if you see, the SIP growth has been phenomenal. So increase in demat account has been phenomenal. So there are 41 lakh demat accounts which got opened in December alone. Now we have 14 crore demat accounts. That is a very big number. So what
Right.
we are seeing incrementally is money is flowing to stock market versus bank deposits. And again, to the reason is that you were getting very low interest rate on your fixed deposits. So that is now being corrected with higher fixed deposits rates offered by most of the banks. Yes.
Absolutely. Most
So
people
again,
are inclined to
yeah. Sorry, continue.
most people are inclined to risk their money on riskier assets than safe haven probably. Moving on, you spoke about central bankers, keeping rates higher for a long time. We have the RBI meet coming up next month, early next month, right after the budget. Um, when do you expect the RBI to, probably cut the repo rate? Anytime this year, next year?
So as per the report suggests that so RBI might look to cut the rates this year if the global central banks start correcting the interest rates. RBI will follow, and that is what our understanding is.
Right. So the Fed has been saying that they are looking to cut interest rates probably later this year. So does the ECB. Probably right after that, RBI will follow the Fed's footsteps. Um, Nishit, I have a question for you. For say young investors, who want to put some money on stocks or mutual funds, what kind of advice would you want to? And when I say young investors, it's not only people of younger generation, probably a housewife, probably if my mother wants to invest in stocks, what kind of advice would you want to give to them?
So my first advice would be to them to read at least 5 books before you start investing. So
Right.
investing in stock is like any other profession. You have to read before entering that profession, executing trades. So again, there are books for starters which I would suggest them to read. Maybe one is Richest Man in Babylon. The second is book by Peter Lynch, One Up on Wall Street. So these are few good books to start with. Once you get understanding of how to invest, then I would advise them to invest typically every month a small amount for them to experience how the market works.
Right.
And it need not be in one particular stock, it can be in different stocks, because whenever you enter any new profession, it takes at least 5 years for you to understand that profession and be an expert. So the thought process should be to understand that particular segment, to understand the stock market for the next 3 years, 5 years. Focus on learning first, and once you learn the art, it is very easy to make money. But
Master
you
it.
have Yeah, but you have to
Right.
spend time understanding it.
Sure, sure. That's
It is
fantastic
not a
advice.
rich, quick scheme.
Right, right. That's fantastic advice, Nishit. Is there anything that you would want to add, for the viewers that I may have missed asking? Then please feel free to add.
So, the philosophy of investment that we follow at Equitas is we follow value investing approach. So, what that typically means is that we would like to buy companies at discount to their value. That usually we do when we go to a mall. We would look for a discount. So that is what we imply in our stock market. Why do we do this? It's basically to have our downside protected. The term is to have margin of safety, which is coined by, which is used by Warren Buffett. So what this typically does is when you buy something at a discount, even if your estimation about the future growth or the company is wrong for the time being, it gives you comfort because you have not paid much for the
Sure.
particular stock. In the current market scenario, what is happening is the stocks are priced to perfection. The stocks being at 30 PE, 50 PE means they are discounting for the next 3 5 years of earnings. What we have seen in the past cycles is it is very difficult to estimate growth, estimate future. So
Right.
let's say, and how the stock market works is it works on the basis of surprises. So let's say if a stock is expected to give 30% return, it delivers 30% return, there would be no change in the stock price, which is in the current market scenario. But let's say if the stock is expected to give 30% return, but because of, let's say, any global issue like Red Sea or China dumping or XYZ, the stock delivers only 10% return.
Right.
So there is a significant downside risk possible.
Sure.
So
Sure.
this is one important concept which I would like to basically let your viewers know.
Right.
This is
So,
what we
what is
follow.
Equitas's mantra for best investment? Probably, if you had to put it in one line, what would that be?
Uh, so what we do is invest in the right companies, good
Right.
companies, and we focus more on price. So there are
Sure.
two concepts: having good companies and good investment. Our focus is always on finding good investment opportunities. We
Sure.
all know that Hindustan Unilever would be the best company, but is it good at 50 multiple? The answer is no, according to us.
Right. Right. Um, those were some very interesting, fresh inputs and thoughts, Nishit. Thank you so much for joining us. That was Nishit Shah from Aquitas Investments.